Hello from Otet Markets. This is Ahura, and I'm here with you to review the U.S. personal income and spending data and market reactions. First, as always, let's check the data and see what we have in the economic calendar, and then we can go and see the market reactions. As the data, personal spending increased by 0.5%, while the income increased by 0.3%. However, the real spending increased by 0.4%. On the inflation front, the PCE, PCE price index increased by 0.2% on the monthly basis in September, which means that annually PCE price index increased by 2.1%, in line with expectations, but down from 2.3%. However, we should mention that on the monthly scale, PCE increased by 0.2%, almost twice more than 0.1% increase in previous months. So that's these numbers for the September. While when it comes to the core numbers, the core PCE price index increased by 0.3% in September in the monthly scale, and on the annual scale, core PCE price index increased by 2.7%. 0.3% monthly, it was more than 0.2% in August, but in September it was it's printed 0.3%, in line with expectations, but more than 0.2% in August. On the annual scale, while it was expecting to fall to 2.6% from 2.7%, it's steady at 2.7%. Generally, PC fell to 2.1% from 2.3% expectations, but these numbers means, especially when you are looking at the 0.5% spending, it means that generally the market expecting better economic condition. The consumers, they are positive, so they are spending money. When they're spending money, it means that there is a more demand. When we are talking about the more demand, it means that inflation should stay. Falling inflation should be much slower. So higher inflation for longer, which means the higher rates for longer. Still, so these numbers means that inflation still there. So it's falling, it's decreasing compared to the previous months, but still we will have a more challenging days to lower the inflation more than these numbers that we have currently. At the same time, we had today the jobless claims. When we are looking at the initial jobless claims, it increased by 200. We had only 216,000 applies for unemployment benefits. This while the continuous jobless claims also fell to 1,862,000, down from 1,888,000. So these numbers means that generally, when you're looking at these data and these numbers, they say that the labor market is still strong in inflation. While it's slowing down, but still the inflation also strong. So stronger inflation, stronger labor market means that for sure we will not have 50 basis point raise cut that market was expecting just until 12 weeks after previous Fed meeting. Now 25 basis point rate cut with more than 96% is the most expected reaction from the Federal Reserve that we are expecting to see, which is going to be the meeting, which is going to be held in next week. So in the next week's Federal Reserve meeting, 25 basis point rates cut has more than 96% chance. That somehow can be negative for the US dollar, and but this negative US dollar why it can be somehow negative for US dollar, because anyway, it's a rate cut. So rate cut cannot be the positive. But at the same time, we should remember that market was talking about the 50 basis point rate cut. So that number means that we shouldn't expect more dovish stance from the Federal Reserve, which is the positive for US dollar. Unlike the initial reaction in the chart, as you can see, the initial reaction was negative in the US dollar chart, but these numbers could be positive for dollar index. So which means that the falling more from these levels, it's something unusual, and we can expect US dollar to have somehow stronger reaction to these data. So these numbers can be somehow the positive for US dollar index respond and unlike the initial negative reactions. However, market could be a little bit more vague until tomorrow's NFP numbers. However, so far these numbers are positive for US dollar index and can hold it back from falling more. On the stock market front, these numbers means that the Federal Reserve will not be in a hurry to cut the rates much faster. So, which is the negative number, which is the negative for stock markets. So, which is not going to be a positive for that because slower rate cut means that we will have the higher rates for a little bit longer, which means the negative news for your stock market. So, stock markets can be under pressure and can continue its slow downtrend. Even thought if we can have some correction after yesterday's and today's fall, but still the market can have even if it has some correction after these falls that it had so far. But generally, the market condition for the stock markets is negative, and these numbers also these data say same on the US dollar, on the gold front, since the dollar is going to be a little bit strong and we can hold the rates for longer, which that both these numbers will be positive for US dollar index, which is negative for for a stock market, and negative for at the same time negative for the gold market as well, because when we have a stronger US dollar, we can have a weaker gold against as XAU USD is trading against US dollar. However, at the same time, when these numbers and these data negative for stock market means we will have more demand for safe havens, which is one of them is the gold. So generally for the gold, nothing changed too much. Gold still can be in demand with the higher risks that we have generally in the market, geopolitical and the political risks that we have. At the same time, when the stock markets are negative, when the stock markets are not increasing, we have a more cash out from stock markets and cash in a safe haven markets, including the gold. So these data, while maybe in a short term can put the pressure a little bit on the gold price, but in the midterm and the long term, the gold uptrend cannot be changed with these numbers. So still, as I said, tomorrow's NFP will be K data, and we will have we have to wait a little bit more until tomorrow's data. But so far, these numbers means these reactions. The numbers that we talk about, they will have these reaction in the market. If you had any other question, please do not hesitate to write down in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.